And the most important thing is tracking these changes helps you as the owner mind your own business by helping you plan the growth of your business, help you manage your taxes for the business, and more importantly, helps you make decisions, informed decisions about your business. Okay? Is this making sense to you? Now, let's move into the last section, 5, and let's jump into this bad boy. Okay. Last section of part 1 of our 301 course. Okay? And this is like the accounting equation. Okay? So this is really the foundation of small business finances, what I'm about to jump into here. Okay? Understanding this formula is really like knowing the rules of how to play the board game. Okay? The good news is this thing is super easy. Remember what we talked about it before. ASS equals L plus E. Okay? Your assets equals your liabilities, right? So your assets, what you own, equals what you owe plus what's left over. That's the equity. Okay? This sucker is like the bedrock, the building block of the entire foundation of this house that you're building. Okay? And by the way, this holds true for every business we look at and every transaction you make. It's always the same. Okay? But what do these things mean? Okay? We've talked about it before, but an asset, again, it's what the business owns. But what does that mean? Okay, here's some things. Cash, inventory, equipment, and then accounts receivable, money that's owed to you. Okay, so cash in the bank, inventory and product that's sitting in your warehouse, equipment that basically helps you produce your widget, right? And then what people owe you, contracts and stuff. Okay, liabilities, what your business owes. Okay, things like loans on the equipment that's an asset, credit card balances, lines of credit, unpaid bills, liabilities. Okay, and then remember, equity, what's left over. Okay, so think of it like a house. House itself is the asset. 123 Jumanji Lane, right? Springfield, anywhere Texas, anywhere Missouri, anywhere US. Okay, the house is the asset. The mortgage is the liability, what we owe. So the asset is what we own. Subtract the mortgage, what we owe, and then what we have left over is the equity.